Hey, what's up? What's up, everybody? We're going to be starting here in a couple of minutes. All right, 2, 3 minutes. We're going to get this whole thing going. What's up, Lamar? We'll see you guys in a few minutes. All right, everybody, welcome to the session here. My name's Rodrigo, and we're going to be here with Chief Market Strategist Matt Maley, also lead trader at the Stock Picks Inner Circle chat room. What's going on, Lamar? We have a pretty packed session today. So at the end of the session, we're going to be going over questions, Q&A, trade ideas, all that sort of stuff, education. So make sure to pay attention. The Georgia, what's going on? A couple of folks here already. Ali, what's going on? Cisco, Nelgar, Sam, Teresa. All right, folks, we're going to go ahead and get this started here. Let's go ahead and give a big shout out here to Matt Maley, Chief Market Strategist. I believe we have him here in the back.
Hey, Rodrigo, how are you, buddy?
Hey, Matt, what's going on, man? How's everything going there?
Going good. It's been obviously crazy year in the last couple. It's funny, every time we talk, it's like, well, I think things are going to continue to be volatile, and I think, oh, geez, they think I'm just saying that, even though I really do. And sure enough, it continues to be really volatile, and it's going to stay that way at least through the end of the year, and I think well into next year as well. So it's great. It's really exciting time and a great time to be
right.
Trading in the marketplace, being an active trader, because that's the best way to take advantage of this kind of volatility.
Yeah, and you've been doing this for 40 years. So, folks, if this is your first time in one of these videos, put a 1 in the chat. If you've already been here, put a 2 in the chat. In the meantime, Matt, for those that are coming here for the first time, if you can give us a brief description. You've been doing this for 40 years, just so the folks can get a sense really of your background along with Wall Street, right?
Sure. Yeah. Again, 40 years in the business, and right now I'm, as Rodrigo said, I'm the chief market strategist at Miller Tabak, and along with what I do here with Benzinga, and what I do is I have a unique background in terms of strategist. Is I'm a former trader. I spent 25 years trading. I spent the first 15 years at Solomon Brothers, which was one of the biggest trading firm on Wall Street in the 70s, 80s, and 90s. I was there for 15 years during the 80s and 90s, and it was a time when trading really became into fashion. And and during that time, I traded with the biggest institutions in the world. I mean, the biggest mutual funds like Fidelity, the biggest hedge funds like BlackRock, biggest State Street Bank, biggest banks, insurance companies, you name it. Those were the trading desks that I talked to, and I really learned much differently than most strategists. Most strategists look at the theoretical side of things and say what should happen over the next 3 to 5 years. And I certainly look at that as well. You always want to have that long-term view, but also as a trader, I learned how to be a what's not what should happen 3 to 5 years from now, but what is really going to happen a year from now, 3 years from now, and what is going to happen And as a trader, I know what's going to happen 2 hours from now, what's going to happen 3 days from now, what's going to happen 3 weeks from now. We're always looking at that trade. And that's really worked well for me as I transitioned to being a strategist over 10 years ago. It gives me a unique view because we really care about what's going to happen, not what theoretically should happen. And so that's, again, what I've been doing. And like I said, 15 years at Solomon Brothers, 10 years at Merrill Lynch. And then I came to Miller Tabak about 15 years ago, or almost 15 years ago. It's that's my background. And then we moved here when we're doing this work with with Ben Ziga, some stock picks newsletters and such, and this new chat room that was not that new anymore. Now we've been doing it for about a year, and it's worked out really, really well, especially during these volatile times, because a lot of people have had a tough year this year, but we've done really well in the chat room. We're up many hundreds of percent, and again, I guess the biggest thing for us right now, I'll just leave it at this, is just to say, unlike 10 years ago or 12 years ago when the great financial crisis took place, the last bad bear market, the individual trader now has so many more tools at his disposal to take advantage of these things, whether it be weekly options in all of the major stocks, options that trade several times a week, 3 times a week in the index, ETFs, group ETFs. You can buy inverse ETFs, you can buy leveraged ETFs, and options on those leveraged ETFs, et cetera. And it really enables us to make take advantage of the situation in both directions, because that's really what you need to do. Hey, the institutions have been doing it for decades, and we're now be able to do it as individuals in recent years, and it's worked out real well.
Right. For those that don't know, Matt has a live room where he's trading all day 9 to 5 with the members. We have several of them here. All right, Matt. So basically you're able to understand the news, but also you can trade the volatility. That's basically your thing. I know most people usually shy away from that. In your case, you pretty much embrace it and trade around it, right?
Absolutely. I mean, it's, again, there's nothing wrong. In fact, everybody should have a bucket that has, a bigger bucket that is in where they have their long-term investments, where you have that 3-year, 5-year, 10-year, if you're really young, 20 or 30-year horizon. But of course, nobody's gonna know. I always laugh when somebody says, this 30 years from now, this is gonna be, and I go, you'd have no idea what's gonna be 30 years from now. But you do wanna have at least 3 to 5 years. Sorry, let me turn that off. Sorry about that. And I always mean to turn it off and I always forget. But so we go with this, again, but you want to have, if you have the time, if you have the interest, being an active trader, have another bucket where you can be an active trader, and you can trade. First of all, you can trade around those bigger positions that you have on your long-term portfolio, but also take advantage of some shorter-term trades. Some of those may be several days or even a couple hours, but some can be several weeks or months. And when you're active like that, which we've done, specifically like in groups in the energy stocks, and we'll talk about that today. I was wildly bullish on the energy stocks, turned bearish in June, made some money there, turned bearish again as we were moving into September. That worked out real well. And right now, just literally more recently, I've gotten bullish again. So you can trade around those. I mean, you want to own Chevron with this nice big fat dividend for a long time. It doesn't mean you can't trade around that position with some options plays and make some negative bets here and there, or on the ETFs in the energy sector. So that's the whole idea in terms of active trading. Do swing trades. Some people in the chat room are day traders, but when I say swing trades, ones that may go for 3 or 4 days or even a couple of weeks. And again, it's a great way to maximize. The key for me is to realize not to get that stuff in the middle. A lot of technicians, they want to get the stuff in the middle, that 70% in the middle. I want because I sit there. The stuff in the middle is good, but the thing, from the bottom to the middle and from the top to the middle, that's where the big juice is made. And we're really able to get those things at the key turning points. And whether it be individual stocks, groups, ETFs, and different markets, in all sorts of different markets, and we can take advantage of those. So it's a lot of fun, and but also very profitable as well.
Yeah, and you've been consistent with your entire approach, right? At least what you think about the markets, ever on CNBC and on these sessions, you've been consistent with it. And that's really good, Matt. So let's go ahead and just show us more or less how you're able to profit from this volatility. I know you have some recent trades there that you want to show the folks here, right?
So let me just pull up my, oops. my screen here. Yeah, sorry about that. Thing. And just give me one more second because I want to bring up. Oh, you know what? I'm going to go here first. I'm going to go here first. Okay. And okay, whoops, I had it right on the one I wanted. I'm sorry. Okay, here we are. Okay, good. All right, let's just start right here. Again, this is just what took place in the last day, and then we'll go back, last several weeks. And it was funny. I was typing through this thing and saying, I went through just my whole year, and we've had some good calls some really good calls every single month. And I said, geez, I don't have any calls for October. And then I realized, well, it's only second trading day of October, but we do have some. But it was funny. When I was looking at it this morning going, I thought I had more. I thought it for every month. But anyway, what we did, again, what I try to use, and let me first of all, blow up the slide so you can see it better. Okay, but what I try to do with my trading is in the trading is fundamental analysis is very important, but it's not the only thing. In fact, it can if you follow it too closely, it can really burn you badly, because there are times when a stock gets overbought or overloved or oversold or overhated, or a group gets that way, where no matter what the long-term fundamentals are, or even the intermediate-term fundamentals, it can see a sharp move in the opposite directions, and we like to take advantage of those. So we always want to have a very close eye on those fundamentals, but we look at technical analysis when things get overbought or oversold, or even when a stock's not even overbought or oversold, but it's breaking a key resistance level or a key support level, and we can really take advantage of those. We also look at sentiment indicators, which can be very, very, very helpful, and they helped us this week. And also positioning. When too many people, especially when you get too many people on one side of the boat, whether it be both with their positioning and with their opinions, in other words, their bullish sentiment or their bearish sentiment, it really can present some great opportunities. Now, we had here this week, yesterday, we saw the market was really obviously saw this big bounce, and the market started really rallying up. And towards the end of the day, we were thinking, we had some puts. We're worried about the market selling off. What are we going to do with this? And I said, we've got to have some participation. We've got to have some exposure on the buy side. So at the it was fun. It was funny. At the very end of the day, I put in a trade, and my system froze up. And 3 minutes later, the market had closed. I was trying to put it right at the end of the day. But I did know that, hey, listen, we can still buy the index ETFs, many of the index ETFs, after 4 o'clock, in between 4 and 4:15. And the reason for that is the futures market doesn't close until 4:15. So even though I couldn't buy the calls, I wanted to buy them in the TQQQ because that was a leveraged ETF. Instead, I was able to buy them in the QQQ. And I just bought it for this Friday. And when I came in, when I come in with these trades, I come in with very specific trades. I don't just say, hey, the market looks good here. You ought to buy some index calls. No, I came in and said, hey, buy the October, the QQQ. There's the symbol, the expiration date, October 7th, the $280 calls. And obviously, I tell you whether it's a call or a put. And this is how they traded. We bought them after 4 o'clock. I see 1600 is 4 o'clock. I bought them just before 4:15. My system finally came back up. And here, by what we had seen was that my feeling was that there was a lot of things going on and some things in the background. I thought this is not going to be this is not going to be one of those days like we had the previous week where the market rallied one day and then rolled back over. I really felt that what was going on, that I felt that, to be perfectly honest with you, I thought that the Federal Reserve and the Swiss banks and the Swiss central bank and the Swiss government would do what they could to help provide liquidity in the marketplace, to make sure that these rumors about Credit Suisse being in trouble wouldn't cause a big panic in the marketplace. So we went ahead and bought those stocks. So it was more just an experience thing rather than a real technical outlook, because the market had already rallied so much. People were saying, should you buy some puts, which we did. And I don't want to say that, but we did. We made over 120%. Now, if I'd held on a little bit longer, I would have made almost 200%. Now, again, I didn't get the exact low. I didn't get the high, but it's like, geez, the market's opened up. It had already rallied a big way. It opened up another 2%. I said, we got to take some profits here. And that's what we did. So you see the QQQ, if you just, for those who are new, are not familiar, it is the ETF for the NASDAQ 100. We have the NASDAQ Composite Index, which has several thousand stocks in it. And then they had the NDX NASDAQ 100, which is the top biggest 100 stocks in the NASDAQ. And a lot of those are those technology stocks. So it's heavily weighted to the technology names. And that is the QQQ. And then the other one that we played was late in the day. Now this will be a little misleading for those. I say misleading. It's not misleading. It's for those who are here from the chat room are going to say, well, wait a minute, you just added to it. But let me explain. What we did, we came in and we'd own these TLT. So it's a treasury market. We don't just buy stocks. The treasury market calls. And we had these for several days. They were trading down. The TLT was trading was trading down near 100 when we initially bought these calls. We bought them, we sold them, we kind of traded around them and actually made more than 100%. But I just wanted to show what we've done this week. And this was a trade that I did on on Monday, yesterday, late in the day, added some, again, added some of the October 7th calls. October 7th, that's the expiration date. See, it's October 3rd was Monday, down here October 4th. So this is October 7th being the expiration day of this particular option. And this is the TLT, which is the Treasury ETF. This October 7th, so the expiration date, the 106 strike price calls, 105, and the calls. And sure enough, the next day we bought and sold them with a nice 53% gain. In the marketplace. So these are just what we've done this week, but we've had many, many other calls, many other plays just late in September. Again, I want to show you how we do it in a number of different areas. This is the UUP. This is the dollar, the ETF for the dollar. There's a UUP and a UDN, but those are the, UUP being, it's the bullish ETF for the dollar. And we bought the September 23rd, $29 puts. Okay, that's the expiration date, but we bought them earlier in the month. And because the dollar was getting very, very overbought. So sure enough, we came in, bought the puts. 4 days later, after we made we doubled our money, we went ahead and took profits. See, it's 4 days later, or actually 3 days later if you go by the exact timing, but it was on the 4th day that we took the profits. So again, we look at these, we look at every opportunity we have. We've actually made some nice money in the UUP puts earlier this week, but I didn't have time to pull up the chart. Okay, here's another one. Oh, that's the one I just showed you, I'm sorry. Did I tell you that? Yes, okay, sorry about that. Okay, here we go with the, in the middle of the month, in September last year, we saw how tough the month was for the stock market. We bought the TQQQ. Again, that's the leveraged ETF on the NASDAQ 100. So we want to leave even more juice in it, okay? In the middle of the month, we saw a great opportunity to buy some puts. So we went in and bought the September 16th, $30 puts. And sure enough, we bought them early in the morning one day, got almost exactly the low. The next day, by midday, they were up 250%, and we went ahead and took profits. Didn't get the exact top. We almost basically did get the exact bottom in it the day before. Again, this was the next day. And a lot of times you sit there and go, I'm up 250% a day. Am I going to really sit on that? Usually, I mean, that's 3.5 times your money. Take your profits and run. There are times when we think we have good reasons for it to go out. But and in other words, I thought this was something that could last for several days. But I'm like, we just made 3.5 times our money. I'm not gonna. do I want to leave that? And said, in worst case scenario, we're going to take at least profits on half of it, and that we guarantee that we're going to have a profit on the full position. This is another one from earlier in the month. Again, the puts obviously did really well because the market was running, having had a tough time all month. We made 166% on this TQQ one, but this was the September 9th puts. Oops. Okay. And then we go, okay, and then we're I'm just showing that there's a consistency here. I'm certainly not showing you all of our plays. I'm showing you a lot of good ones. Not all of them make money. That's for darn sure. The whole idea is to make real good money on the ones that we do well. Here's one from August, LABU. What the heck is LABU? LABU. That is the ETF, the 3 times leveraged ETF for the biotech industry. Okay, and so we bought that. The August 5th puts, $10 calls, 800% in just a day. Okay, again, this is something I thought could run for a couple of days, but you're up 800% in any trade, you got to have a darn good reason to hold on to it longer than that.
And for those that don't know, Matt Maley has the record here for the highest percentage win in the history of Benzinga Trade Alerts. I believe it was FXI was like some sort of 8,000% gain. Before that, it was shorting Viacom, which was another insane trade. And the members know that. Those were memorable days. Those were
those were, I was trying to see. I'm going to show you the, needless to say, I'll go for our, whoops. Where the heck is my... I thought it was, there it is. Okay, yeah, I thought I have these things numbered. I thought I had the right one. Okay, here we go. Okay, great. Okay, so yeah, this was the trade here. Let me just blow up the slide so you can see it better. But this was for the FXI. This is again, we're not just, we're looking wherever the opportunities are. This is a situation was in China. And, 10 years ago, you wanted to buy, make a trade in the options market in China? Well, yeah, do you have a broker in Hong Kong that you can call and he can do the currency trade? Yeah, you didn't have that. Only the big institutions could do that back then. Now anybody can do it. Now this says last week's chart. Well, it was last week's chart when I made it back in March. So kind of disregard that. But everything else you can see. Again, the Chinese market looked horrible. The stock had just this is the FXI ETF, and it just made a series of lower highs and lower lows. It was just a horrible looking chart, and for good reason. Remember, this is 2021. If you remember, they were, they cracked down on Jack Ma and Alibaba. Then they moved to other areas of the technology sector. Then they did the educational sector. They did the gaming sector. You name it. They went to every month. They were cracking down on another sector. And the group, every time it got oversold, it would bounce a little bit and then come back down. And this is where the technical analysis, so this was the fundamental side of it. It was getting knocked down. I'm like, stay away from this thing. If anything, we want to be short. But then as we moved early this year in the first quarter of this year, then it just got crushed on top of all that negative news, because the U.S. came in and said, hey, we're gonna probably we're thinking about delisting some of these companies here in the U.S. And the stocks just got crushed. And I was sitting there going, so this is where the technical analysis came in. I said, oh my gosh, this news, all the bad news is in there. Now let's look at the technicals. See, this is what's called the relative strength index, the RSI. See that red line? That's when it gets to 70, that's stop. It's getting overbought. Stop buying. That's why it's a red line. So you can see when it got overbought there, it sold off. Got overbought there, sold off. Got overbought here, got close to overbought, sold off. You can see that. But when it gets down to the green line at 30, that's green, that's buy. Go ahead and buy. And see how every time, this doesn't look like big rallies, but they're nice rallies, very tradable rallies. But then look at the one here. Look how oversold it got. It got down to 30. It got down to 14. I'd only seen one other thing in my life that got a little more oversold than that. It was I think it was Tesla at one point. But anyway, and so I said, we got to go in and buy the stock. But not only to buy the stock, we got to buy the ETF. We got to buy the call options on the ETF. So sure enough, we went in and did it. And look what happened to the stock, to the ETF. The next day, up 27% in one day. And remember how oversold it was? Went right up 27. That's like the Dow Jones. Looks like the Dow Jones or the S&P going up 27% in one day. I actually drove it out to 2 days, but it did get up in that first day as well. And so what did we do? Well, we came in, okay, on the 15th, and we bought the FXI March 18th, $30 calls. We bought them late in the day, about 3 o'clock. And by the next day, they opened up 1,000%. It's like, well, Matt, I thought you said if something opens that much, you always take the profit. And I go, well, yes, usually I would. 1,000%. Get me out. Where I don't care how high it goes. But in this case, I knew not only would this thing was oversold and probably bounce, but I knew that the Chinese government would make it bounce because they were losing face. Their stock market was getting crushed. It was one thing for their stock market being crushed because of what they were doing. Suddenly it was getting crushed even more because of what the U.S. was doing. They were talking about delisting their stocks. So I knew their government would come in and support the market and buy their market. And sure enough, they did. So I held on. We held on till about 11 o'clock. It was up almost 3,000%. And I said, oh my gosh, I think this is still going higher, but we got to take something off the table. So we took half of it off the table at 2,900% gain. It's almost 3,000% gain. Then, so we held on it to the very end of the day. And at the very end of the day, it's up almost 8,000%. I said, okay, I think it's still going higher, but I can't, let's take the other half. So to combine the two, we made over 5,000%. But And I kept saying to people, in the chat room, I think this can go higher, but I can't. I've got to take some profits here. Well, some people did stick with it. They made over 10,000% if you held on for another day or two. I did not. I can't take credit for that, but that's what I did. So these are the types. These types of trades obviously are something like we had one in Viacom where we made same type of thing. We made 2,500 on the first half of the trade and 5,000 on the second half of the trade. Don't look it up because Viacom is been split off, but I can show you the trade. But the stock sold off 60% in the March of 2021 because remember all those meme stocks were running around, and its RSI got up to 93. It was just absolutely ridiculous. And so let's see if I can find that right here. I think well, I'm not going to do it, but the people in the chat room can tell you about it. But we definitely have done some very very big trades. And again, I don't want to overdo it, but we've been doing it on a very consistent basis. This is going back in April. We're at 600% on this one on some SQQ calls, which is the leveraged bearish ETF. So QQQ 100%, the VIX calls 80%. So SQQ, I just want to say because we have some others here. You can just say we see in May 78%, 71%. 220%. Oops, I'll go back there just so you can see it up here. See 220%, and just that was in one day. I just want to show you because we do it with some individual stocks as well. Apple Computer. This was the 400% trade. Again, my experience. I knew from years past that sometimes when illiquid assets get sold and get crushed, the forced selling, the margin calls that take place in those situations, it forces these investors to go to somewhere else, to more liquid markets, to raise the cash they need to meet their margin calls. And that's what we saw in May. Remember, the cryptocurrencies were just getting crushed, and these guys were getting margin calls. And I knew it's like even the Bitcoins and the Ethereums of the world are not liquid enough for them to meet their margin calls. And it sure as heck wasn't if you own Dogecoin or one of those. So what did they do? They had to go sell what they did own. And I knew that they didn't own General Electric. These guys are owning Bitcoin. They're owning Apple Computer. And I looked at Apple and said, sure enough, the stock's down 10% for no reason. The only reason why it was down was because of source of cash. It's something I had seen in the past. So finally, on the 12th, I realized they've finally seen a stabilization. It comes straight down and stabilized in the cryptocurrency market. So I realized this selling, using Apple as a source of cash was going to end. So we came in late in the day, bought the Apple May 13th, $143 calls. Next day, we sold them for over 400% gain. So you made 5 times your money in one day. Now, it did go higher. I didn't get the exact high in the day, and I didn't get the low the previous day. But if you're making 400% on a trade and you're kicking yourself for selling too early, you shouldn't be in this business because if you sell it up 10% and it goes up 400%, yes, you can be mad at yourself, but you'll drive yourself crazy because you're never going to get every bottom or every top. And when you do, you'll be pretty much lucky. Don't worry about that. You want to get your big gains, move on, pat yourself on the back and move on. Don't worry about missed potential when you make a lot of money. So these are just, again, I just showing that we did it. We do a lot of index things. Oh, this was the Viacom trade that I talked about. Viacom, see how overbought it got. And this is what we did. We came in and we bought the calls. The stock sold off 60% and we made 5,000 times on our money. So that's really what we do. Here's some Amazon calls we made. That was actually a trade. I'll just leave one more before Rodrigo, before you pipe in there, is that here was a trade that had nothing to do with me. Right? People in the chat room came and said, "Hey, I really want to look at the Amazon calls. Whenever the stock splits, the stock goes up." And I said, "Yeah, that really looks like a great idea, but I'm not going to play it. I don't know why. I just didn't feel right about the trade." And of course, I was an idiot because some people they who did buy it, they made 500% the next day, and a couple of days later, they sold the other half up 1,500%. So again, this is not just me and my ideas. We have a group of people who just love talking the markets, sharing ideas, sharing their knowledge, teaching people. We want to be very educational, and we'll talk about our Zoom call that we did today. We do it every Tuesday, but that just gives you an idea of what we're doing. It's not just me; it's a whole team of people. When you're trading, it's really hard to trade alone. In the chat room, we have a great group of people that we all trade together.
No, definitely. And really quick here, before we do get into chopping the markets and a couple of stocks here with you, Matt, I've been getting a lot of emails and questions about this live trading room. So we'll go over this really quick and we'll get back here into the session. There's a stock here that I want to ask you about, but let's just go through these questions really quick from the viewers. Are the sessions on Tuesdays recorded? Yes, they are recorded. Does
And we
everybody
should just highlight that Zoom call, which I didn't get a chance to do. I'm sorry, but that's, and then we'll finish the questions. But every Tuesday for about an hour, we have a Zoom call, much like this one, and we talk just about the markets. We talk about the general markets. We talk about our picks. We talk about what we're thinking about being picks later in the week. It's a good time. Tuesday is a good day because Monday is kind of the beginning of the week. We're just kind of getting into the week. So we do it Tuesday. We get out there. Now, obviously, we're talking all day long in the chat room 5 days a week anyway. But this is a real good idea where I can bring up my Bloomberg, which I'll be doing here later on, and show you what I'm looking at and why I'm looking at it. And people will ask me about their stocks. Hey, I didn't, stocks I didn't even see and didn't even know and didn't realize they were breaking out or breaking down. And we'll look at those. But it's a great session. So I apologize, Rodrigo, but I should have, and I had not explained that.
No worries, man. All right. So next question here. Does everybody that joined get a free laptop? Yes. Until midnight, we are giving away that. Good question there. What is the chat room schedule? That's Monday to Friday, 9 to 5, and the Tuesday session, 11:30 to 12:30. So it's about 1 hour. Is there a money back guarantee? Yes, we are doing a 30-day money back guarantee till midnight. Price at renewal is the same as it is today, 70% off. It will not change. Let's see. Next question here. How much capital required to do any of these trades? Matt, some of these contracts are like 80 cents or something like that.
Right. So if you pay 80 cents, you're paying $80 for one. But it's that, and we try to keep it there. I mean, these big expensive options. That one thing is great is so many of these stocks split. In the old days, Tesla, you buy anything, you had to pay thousands of dollars. Well, almost had to pay over $1,000 just to buy one contract. But now they've split, and so those things are much cheaper. The options are much cheaper, and I do try to keep it down. And that's the thing is, you don't need a lot of money here at all. I mean, you can buy two or three contracts. Believe me, I buy very small. Sometimes I'll just buy 2 or 3 contracts. I avoid buying just one because I like to be able to, when I sell it, I like to be able to sell half and sell a little bit later because it's like, especially if something's doubled, I can sell half, and that means I lock in, like no way I can lose money, and then kind of play around with the rest of it because it's all gravy. But either way, you don't need to be spending thousands of dollars. In fact, I don't spend more than 10% or very rarely spend more than 10% on any position. And any one position because you don't want to lose. It's still a risky business. Options are risky, yeah, it's you can do this with, especially you can get started by paper trading and just writing down what you want to do, and then once you get into it, you don't. It's not like you need $100,000 or even $10,000 or even $1,000. I mean, but again, it's you want that separate from your long-term gains, and you don't want to bet the farm on any one trade.
Right. So let's just start here looking at this quick stock here, GEO. It's a sort of a REIT. They manage like jails and that sort of stuff there. Basically, like Michael Burry seems to be pretty bullish on this one.
Yeah, this is an interesting stock. Now, Michael Burry, for those who don't know, he was the part of the Big Short. So he saw what was going on in that whole bond debacle. And the mortgage-backed securities and all that right before the great financial crisis, and he became, a billionaire by betting against it. And he's had some other very nice trades. Now, this is one. Again, this is what he likes to take risk. So there's a certain amount of risk in here. And again, one of the things, this stock has been hurt. Well, let's go back a little further. I just want to show you here, 2009. The stock has been beaten up from where it was. See, it was, it went back before President Biden was elected. When President Biden came into office, he was changing how they were going to do the prison system, and these national, they weren't going to work it through the private companies. like GEO. And but the thing is, the stock came down so much, and the stock started getting cheap. And he came in and bought it. I mean, and part of it, I think, has to do with the fact that even though, yes, the change by the new administration hurt him, but most of their things go through the Department of Immigration, which is separate, through state prison systems, which are separate. That's about 8% of their revenues were hurt by the change of the Biden's policy. Not a big hurt there. Now, the stock did get hurt initially after President Biden got elected. They had to discontinue their dividend, but they have CAD. It's not like they discontinued it because they just couldn't afford it. They wanted to reinvest into the business, which they have done, and so that's why the stock is something that people have liked. Now, but let's look at it technically. So that's kind of the. Let's go back a little bit further. So let's look at it on a technical basis. Like I said, we like to look at all sorts of different things about the stock. We want to look at the fundamental side, which is getting better. And they are, they kind of had the baby thrown out with the bathwater with them, where people just thought, oh, all prison stocks, we got to sell them because of the change in policy for the Biden administration. Well, look at this now. Okay, boom. See this? Oh, let me see if I can draw it. There we go. Here we are. Now you can see this yellow line. The purple line is the 200-day moving average. Okay, so it's breaking above that. You can see, I'm going to get rid of that moving average now, but you can see what's happened here. We see in a long-term chart, we've made a low there and came up, okay, and came back down and basically made a double bottom, or even you can see a slightly higher low. Now it's trying to make a higher high and above that trend line. That's going to be very, very bullish on the technical side of things. I'm going to look at it another way, though. Let's look at. Oops. Uh-oh. Well, take a second here. Hold on. There we go. GEO. Equity. Okay. Now, look at this. What's happening here? See this stock here? That's what's called the MACD chart. It's when the 12-day or the 12-day or 12-day exponential moving average is crossing above the 26-day. Okay, that's kind of like a golden cross. The golden cross, a lot of you are familiar with that. When the 50-day moving average of a stock or a market breaks above the 200-day, that's very bullish. Well, here, this is a shorter term play using exponential moving averages, but it's the 12-day and the 26-day. You see how it's breaking up. It's very close. We got to be careful about a head fake, because we've gotten some head fakes in the past that didn't work out. But when it has seen a nice cross, see a nice rally there, you say, well, gosh, that's a little rally, but it's not much of a rally. Well, actually, that's a 20% rally. Whoops. That was almost a 20% rally. Let's get rid of those moving averages. Okay, if you go into the options, you can make some nice money. Look at this one. See a nice positive cross on its MACD cross? Bang, 26% in 3 or 4 days. These are the types of things we like to look at. And again, like I said, I like to have those key turning points when the stock's really just starting to get going, or when the stock's just starting to get hit. When you can do that, it can work out really, really well.
Right.
When you're making those key changes, and that's when. So this one looks very exciting. There's no question. There's some risk involved in this name because Michael does like to take chances, but it does have a fundamental picture, and all it needs is a little bit. So I guess my point is, you want to nibble on this thing a little bit here, and if it breaks out, we can see that positive MACD cross become more meaningful, more confirming. Then we buy even more and let the thing ride.
Right, and just for those that maybe are not familiar here, in the chat room, Matt, you're also able to discuss individual stocks, not just options, right? So somebody could ask you about a stock with good free cash flow, or a stock, to put out for 5-10 years out, right?
Right, and that's, you look at this thing I've talked about is Google. Hold on, GEO, just recently, the stock is it's back up a little bit, but a couple of days ago, it's trading at 17 times earnings, even at 19 times earnings. I mean, what's better than Alphabet? I mean, there are not many companies that are better than that. I mean, Apple, we got some real good companies out there, but this was the cheapest one of the big cap names, besides Facebook or Meta. But Meta's got a lot more issues than Alphabet does. And so I looked at that and said, hey, listen, at a cheap basis, this thing is trading at 17 times earnings. Now it's up a little bit because it's bounced back. 19 times earnings. Well, that's really positive. So why don't you buy this a little bit now? Because I don't know when this thing's going to see its ultimate bottom. You buy a little bit every month. And over the next, I guarantee you buy this. Oh, I say guarantee. There's no guarantees in the stock market, but you buy this stock, whether it's as cheap as it is, it might go a little bit lower. In fact, I think it will, because I think the overall market's still got some churning to do before it can bounce back and before it can make its ultimate bear market bottom. But if you buy this stock every month for the next 6 months, 12 months, you're going to have a great average price at the end of that. And 3 years from now, it's going to be great. So again, a lot of it, that's more on a longer term basis rather than these other trades I've been showing about in the options market, where we're trying to make, double our money very, very quickly, or make 50% or 200% of our money over a couple of days or a couple of weeks. Here's a situation where we're just talking about a common stock to own for a long time. And yes, definitely. When people ask me questions about that stuff all the time, and I'm more than happy to help out. And of course, sometimes there's situations where I'm not familiar with the stock, or I'm just neutral on the stock. And if that's the case, I'll just be honest. I'm not going to tell you something. I'm not going to tell you what I think you want to hear. I'm going to tell you what I honestly think. Some cases that'll be, I just don't know, if I just don't know the stock at all, the chart isn't saying much, or maybe that the stock is very, very neutral. Sometimes we get stocks that get stuck in a sideways range for many months. We go 5, 6, 7, 8 months. And you say, until it breaks out of that range, I don't have an opinion on it. And so you try to be honest with you, but usually there's something compelling thing I can say is say, hey, okay, it's in that tight range, but that range is between $24 and $29. So that's the key levels. Once it breaks out of that range one way or the other in any kind of meaningful way, it can't be just a small break. Any meaningful way, that's going to be something that people are going to jump on, something you can really hang your hat on. So hold off until then is something they say. But yeah, I'm more than happy to talk about stocks, long-term holdings as well. So it's right. It's a all-purpose chat room.
Right, Matt. Let me ask you: do you think the Fed could pivot or no?
Well, that's the big thing right now. This is going to be a ridiculously exciting time for the market. And boy, the last couple of days have been crazy because we're trying to figure out what the Fed's going to do. Now, the Fed, I have a lot of experience at this. And I think one of the biggest things that everybody says, that we talked about the Zoom call, but we try to do it during the day, is just talk about education and teaching people the stuff that, you're never going to read in a textbook, and you're probably not going to read it on the internet too much either. And so what's the Fed doing now? There's no question, or very little question in my mind, they are not going to pivot in terms of their rate policy. But what will they do behind the scenes? Because right now, Credit Suisse supposedly, seems to be in trouble. This stock, yes. That's the bank in Switzerland, and I don't know if you haven't heard about it, but there's all sorts of rumors that they were in trouble, maybe had some solvency issues. See, the stock did bounce in a big way, about 10% today, but at the same time, it's still at CDS prices. The cost to insure their debt obligations is still very high, and so there's some concerns there. If the Fed has got to do something to make sure that they shore up their balance sheet before any big problems arise, they will pivot behind the scenes, but they'll do it some other way. They can't lose face. They just spent 2 months telling us why they have to keep interest rates high. Inflation's a big deal. Inflation's a big deal. They can't suddenly turn around this week and change their mind. Maybe when you get a couple of inflation numbers, they can say, okay, we can pull back. But they can do some things through the repo market, other ways where they can push liquidity into the system and shore things up so that the market doesn't just fall. I mean, I believe that the Fed wants asset prices to stay down for a while. And there's a reason for it, because they injected all this liquidity into the system after the pandemic, and it got way too far ahead of things. It got way ahead of the underlying fundamentals, all on steroids, all of it, okay? The economy was all of it. Let me take that back. The economy did go better, but that was pushed up by steroids. As soon as they removed those steroids, as soon as they started raising rates and shrinking their balance sheet, the market had to go down. It was the easiest call, one of the easiest calls I've ever made. And people all over Wall Street fought it. They, oh no, don't worry about it. Interest rates are still low, and it was just ridiculous. Now the market's down big. It's down 25%. The Nasdaq's down more than 30%. Now we're in a little bit dicier period What's going to happen next? My feeling is that the Fed is not going to officially pivot. If they pivot at all, it'll be just to buoy things, to keep the market from falling out of bed in a major way. But the next week or so is going to be so incredibly important to decide what we're going to have here. The last 2 days, the activity, the breadth of the marketplace, the advanced versus decliners, the volume has been good. It's all been a very good, it's the type of rally that usually lasts for more than just 2 or 3 days. It will probably take a breather tomorrow. I doubt we'll see upside follow through tomorrow. Take a little bit breather. Then what happens? If we break below the lows from Friday in the S&P or the NASDAQ or both, that's going to be a clear signal that the bear market still has further to fall. If we can see a nice little shallow pullback and digest these gains for a couple of days and then shoot higher again, it's going to tell us that the market, that the Fed is indeed providing some stuff behind the scenes and that the market's going higher. People you listen to people on CNBC, they're going to tell you, well, it's going up because inflation. No, if it rallies from here, it's because the Fed is providing liquidity to the system. And a few things that we look at will be able to tell us whether that's the case or not. But either way, it's going to be very, very hard for it to be the bottom. Again, I guess my point is that we could see a rally for another month or so. I think it's going to last a few days, and then then it loses steam. But it's not out of the question it could last for several weeks. Then after that, you got to rely on the earnings. Earnings are going to start coming in basically next week, at the end of next week. Those earnings are not going to be enough to sustain this level in the stock market. So it's going to be really active. We're going to stay really nimble. We're going to play both sides of the market. We're going to be buying puts on the index options and on individual stocks. We're going to be buying calls. We're going to bounce around because that's where this is a trader's paradise when you see these big moves and the quick, sharp moves. And it's going to be something that we want to take advantage of. But right now, I think that the Fed, when we saw this thing about Credit Suisse being in big, big trouble, that has to give the Fed some pause, assuming that those rumors are true. I hate to say it, but if we find out that the Credit Suisse is a no problem whatsoever, that's actually going to lead the Fed to say, okay, fine, we can just let the market go the way it is, and we're going to go back down. So the only we heard, good news is bad news is good news. If we get good news out of Credit Suisse, that's going to be bad news for the market because it'll tell the Fed that they don't need to prop things up for a while. So, but if they do pivot, it's going to be behind the scenes. It's not going to be outwardly. And so that's why it's hard to try to figure out on your own. It's great to be in a chat room where, we get some smart people talking about it and giving you their ideas about what's really going on.
Right. And that's just really one side of things, right? So what about the whole energy sector there? What's your all thought with that?
Well, that's the thing is that there's a couple of groups here. You say, okay, so what is going to happen here? Is one of the things that worked so well for us this year is we kept making money on both sides. But as the market went down, we had some nice calls. We were in puts. We were in index puts with the QQQs and the TQQs and also the SPYs, things like that, which is the S&P 500 ETF, and made some nice money there. However, we also stayed bullish on the energy stocks, and we were buying calls in stocks like Chevron, Devon Energy, Occidental Petroleum, ConocoPhillips, etc. We also bought XLE calls. We bought XOP, which is the oil and gas ETF. XLE is the energy stock ETF. But then we came in June, I saw it became incredibly overbought. Sentiment became way too bullish. We came in, we bought the XLE puts. We made several 100% on those puts early in June. And even though I'd been bullish on the group since October of 2020, turned bearish for a short-term play, and we took really advantage of that. But what about now? Okay, what have you done for me lately? Well, I think this thing is looking quite good. Now, a couple things. Number one, on the fundamental side, again, we like to combine all these different issues. Fundamental side, we hear that OPEC has come out and said we're thinking about cutting production by $1 million barrels a day. They don't want oil. They don't oil. They don't need oil 120. They don't want it going back to 60. So it was getting down into the 70s. This happened. So they pushed they kind of jawboned oil back up. But on the fundamental basis anyway, And we've all heard it before. We all wish we could go to completely get away from fossil fuels tomorrow, but it's not going to happen. We do not have the capability to do that in the next 10 years. And it's going to be a miracle if we can do it in the next 20 years. And that's one of the reasons why I turned bullish in 2020. Everybody was overshooting to the downside. So, so on a fundamental basis, we just have not put in the amount of investment into the infrastructure to extract these fossil fuels that we absolutely have to do to keep business running. I wish it was. I'm looking at the facts, and I mean, theoretically, I would love, like I said, I'd love to be able to get away from fossil fuels. It cannot happen unless some miracle happens. Then we can change our opinion if the facts change. But right now, these stocks are going to do fine. Now, and I think between OPEC and the lack and the situation with Ukraine and Russia, and then of course the sanctions on Russia, et cetera. But the inability to this, it's not just the supply issue because the Ukraine war, is because we don't have enough. We don't have enough capacity to make enough oil for the needs we have right now. Okay, so that's the fundamental side. What about the oops, sorry about that. What about the technical side? Well, let's go here. XLE. This is the ETF. Remember, this is the energy stock ETF. Look at this thing now. I'm gonna get rid of a couple of these lines because the charts get very busy. But look at this. Here we are. This is the XLE. It dipped below its 200-day moving average. Dip below to now it's shut up. Now look at this rally. This is a very big rally in a very short period of time. So I'm not going to be backing up the truck to buy these names tomorrow because it will probably take a breather. It's up 15% in less than 2 weeks, right? 15% in less than 2 weeks. That's a big rally. So I'm not going to be chasing them yet. But we get, even if it's just a sideways breather, that'll give me more confidence to get back in. But any kind of pullback, my kind of feeling is one of the rules in technical analysis, old support becomes new resistance. And the flip side is true also. Old resistance becomes new support. Well, in this case, we had, we have the new, it was the resistance level. We broke above it, right? The 200-day moving average. Now that's going to be the new support level. I don't think we even fall that far, but if we fall back down to the 200-day moving average, that's why I want to get aggressive. Now, what else am I looking at? Look at, again, this MACD chart. Remember the MACD chart we talked about? It's seeing a positive cross right there. You got to be a confirmed one. It looked like it was going to happen there. See that there? But it was a head fake. So we got to make sure we get it confirmed. And so it's a very slight one right now. It becomes a more meaningful, probably after a couple of days. It'll take a little bit of breather, then hopefully shoot up. That'll be the sign that we want to get more aggressive. Look at the last couple of times. Saw a positive cross there. Look at that strong rally right there. See the positive cross here. See we got a little bit of a head fake, but then it became a more meaningful one. Big rally there. Positive cross here. Big rally here, etc. So, and again, it's the same thing when it sees a negative cross. See that negative cross? Big sell-off. See a negative cross there? Big sell-off. But we're getting getting towards a positive cross. And so that tells me that it should be good. Now, one thing I really like too is that we're really worried about here. There's a real simple concept of higher lows and higher highs, lower lows and lower highs. Here's one where we had made, started to make a nice little series here, but then we made a lower high, followed by a lower low. That was not good. But this now is trying to shift. This low here is higher than this low. So that's good. And if we can follow this again with a positive MACD cross, this is going to work real well. Now, again, and then we also use other things. And again, this is all part of the educational part of it. Right now, I'm going to get, let's see if I can get, I'm going to get rid of the moving average there. There we go. Okay, now we look at regular technical analysis. And let's look at the, this is what the pattern is forming here. Boom. Okay, make that there. And then I'm going to take another line. And this is what's called a symmetrical triangle pattern. Boop. See that? Okay, symmetrical triangle pattern. If it breaks out above that, so we say it would break out above this trend line from June, plus get a positive MACD cross, this thing is going to run very nicely. So again, I think it probably has to settle up in the next couple of days. I'm sorry, take a breather for a couple of days. It may pull back for a day or two. But the thing, I guess what I'm talking about is that even if the broad market goes down, as we learned in the first half of the year, that doesn't mean the oil stocks can't go up. The oil stocks had a great first half of the year, and the bond and the whole broad stock market had a horrible time. So again, these are the types of things we try to take advantage of, these divergencies and these opportunities as they pop up. And again, it shows us that the momentum is regaining itself when you have a 12-day moving average moving up above the 26-day. I mean, it doesn't give you the bottom. It gives you it's telling you that it's confirming that the new change in trend is indeed moving into place and forming nicely. So we got all sorts of things here that tell us that we should be buying some here, and we'll be adding to it if it breaks out higher, whether that be later this week or early next week.
Really quick, I want to give a shout out here to Jake, our most recent family member here. Thanks for joining here, Jake. Let's go.
Thanks, Jake. Thanks for joining. I think you're going to be really excited at the prospect. And like I said, it's not just me talking about these things. People are talking about stuff all day long in the chat room and asking each other questions and giving each other advice. It's I'm not your investment advisor. You don't have to do every trade that I do, and you can do trades that other people do. As I mentioned earlier, there's several trades that I did not get involved in for one reason or another that worked out extremely well. So it's a great community, and we can learn from each other, talking about different things. Certain people look at different charts, and we have several day traders will look at the 2-minute charts and 5-minute charts, and they're looking at RSIs on even shorter term stuff, which is all very helpful, and it's all very educational. Like I said, especially in volatile times, when in 2021 when everything was going up, it was easy to trade on your own, but now it's much harder, and it really involves. And when you have a community of people, and it doesn't take long for you to find out that they really are trying to help each other out. We're not one of these chat rooms with 20,000 people in it where somebody's trying to do the old bait and switch or trying to pump and dump. They bought something, they're trying to pump it up so they can sell it to you at a higher price. That's not what we're doing here. If I do a trade, you know about it, if I sell it, you know when I sell it. I don't sell it and then tell you about it 2 days later, or even 2 hours later, or even 2 minutes later. Tell you right away. So that's what we're working for.
Yeah, you're posting clear entries and exits, right? So all right, so interesting stuff there with energy. Matt, is there a particular sector or anything that you just kind of want to unpack here? I know that there's a lot that you reviewed throughout the day. Anything you want to share here with the folks?
Yeah, I just talked about the energy sector, but there's another one here, is the healthcare. And again, it goes to the I'm sorry. So now this is here, when I talked about the XLE, but then we can dive in the chat room, we can dive deeper. We'll look into specific names. Devon, like I said, Devon Energy, Chevron, Occidental, Apache. Well, I'm sorry, it's called APA Corp now. Whatever happens to be these names. And it's the same thing here in the healthcare sector. It's good to start with these ETFs, then you can really get a good idea of what's going on. Okay, well, let's look at the RSI. Remember, we talked about the RSI. See how it came off a nice bounce off an oversold level. It's not extremely oversold, but it was getting down there. But let's go back to that MACD chart that I just had up there. I'm going to pull it back up. Okay, see, it's just seeing a slight positive cross. It's not enough yet to get too excited, but boy, see that nice thing. And the reason why I'm talking about these groups, and remember, I just talked about the energy stocks. The energy stocks did well, even though the stock market went down. The healthcare stocks are a good defensive group. So when you're getting, does that mean you can't try to buy Apple in this environment? No, but I'm just saying is that if this is a big head fake, if this rally of the last couple of days is a big head fake, the energy stocks can still keep going up. The healthcare stocks aren't going to go down as much, so you can kind of bail on them with a very small losses. But again, look at this. I'm going to clean this up so you don't have to stare at so many darn things there. Oops. Well, okay. Okay. We're just going to concentrate on the MACD chart. There it is. See, positive cross. If this becomes more meaningful. See what happened here? Nice positive cross, big rally. Nice positive cross, big rally. Nice positive cross down there, multi-month big rally. So if this thing can see a more positive cross, so we buy things here, and then we don't mind adding to it at higher prices. As they say, if you buy it, again, we can do it. Okay, let me get back. I don't want to get too far off course here, but the same thing with the, one of the subgroups in the healthcare sector, which is the biotech sector. Okay. This is the IBB Biotech ETF. Okay. Oops, I meant to do the MACD chart. Same thing, very, very similar here. I'm going to get rid of these moving. Okay, I'm just going to get rid of some of the moving averages. Here, the IBB. Okay, see this here? See, and again, a positive cross here. Got to be careful. See, this one was a head fake. It was only a very mild one. That's why this is only a very mild one yet. So we want to see it more meaningful. But we see when it became more meaningful. Nice rally there. And a positive one. Very nice rally there for a full month. Nice further rally there for a month. See these positive crosses and how they can be very telling. Now here, if we get a positive cross and we break above the 200-day moving average, that's the purple line. It's gotten above that a couple times, but only for a day or two and then roll back over. If we can get a clean break of that and a positive MACD cross, again, it gives you so much more confidence to add at higher levels. It's like, oh, why didn't I buy it all now? Well, because you don't have as much confidence. Once you get the confidence with more of that, you can put more money to it and feel much more comfortable about it. So you say, oh my God, I bought some at 122, then it breaks 125, I bought 125, then it gets to 130, I buy some more at 130. Well, my average price is 125. Geez, I wish I bought it all 122. Well, so what? You're at 130 and the stock's at your price is, your average cost is $125. It's trading 130. You've got a winning position. Now you have a stop level. Maybe I'll move my stop to 126. So if it comes down there, at least I'll guarantee myself a gain. And as it really breaks out, I'll just use a trailing stop and move it up. I'll give it a little bit more leeway the higher it goes. And just let it run. Let the winners run. That's the big thing. Cut your losses early and let your winners run. And that's a good way to play it. Again, these are the types of things that we talk about. It's not just buy this stock, buy that option. It's the whole why behind what we're doing. And again, so the fundamental reason is that it's a good defensive sector in a very volatile market. So if it breaks out, if the whole market breaks out, this is going to break out too, but it'll give you some protection to the downside in case everything rolls back over. But still a nice one. And same thing with that energy sector. So those are two good groups we're looking at. And then we can go, then we can dive deeper. We can go, okay, and let's say, okay, remember I talked about LABU. Again, this is the 3-time levered ETF. And of course, this thing is seeing a nice positive cross. You say, okay, let me get rid of this. I'm going to get rid of some of this stuff. But you can see how much we made 800% earlier this year. I mean, what happens? See, again, let's zoom in here. Okay, let's see the IBB breaks out. That means, so it goes, let's say it rallies 10%. That means this thing's going to rally 30% because it's a 3-time leveraged ETF. So, geez. Just for it to get to 200-day moving average, that's a 70% gain. What are you going to do? Well, that may be a little aggressive, but let's just say it just rallies to $10 like it did here, $10. Okay, great. That's a 33% gain. And boy, if you're in the options, you're making several 100% gain, not just 10%. And that's, again, these are the types of things giving you the knowledge to know that these things are out there. That, oh my gosh, I don't just have to buy the IBB. I can buy the leveraged ETF. Or if I don't want to do that, I can buy the options on that ETF. I can get even more aggressive. I can be either as aggressive. I can be as little aggressive or very aggressive, depending on how, depending on, and again, like anything else, if you're new to it, you ease into it. You're not sitting there going, oh, people say, geez, I lost my whole portfolio. No, excuse me, my entire trading portfolio in a week. I'm like, I would never invest that much in 1 week. I would ease into it. And then even when I've been doing this a long time, I would never bet the farm on almost anything. And even then, I would never bet 100%, even close. Like I said, I rarely bet more than 10% at a time. But when you're in the options market and you bet, you make a nice little bet, suddenly it's like, oh my gosh, it's this. It's not that big a deal. And if it goes, if the stock has a really nice run over the next 6 months, it's going to go up 20%. Oh, that's nice. That's great. But if you get in the options, you can be up a couple of 100%, and suddenly that works out too. Again, it's more risk involved. We don't win on every time, and absolutely, we definitely have losers. But the whole idea is to let the winners run, take your losses early, and working with a team of people who can help you avoid the big catastrophes. And so that's really how we try to do it. So those are 2 groups that I'm really looking at right now. If this market, if it looks like the Fed is going to be pivoting behind the scenes, then we'll get more aggressive in other areas. Believe me, there's plenty of other stocks out there that'll do very well. But that's what I'm looking at right now. Okay. Now, the one thing that we're going to do here, Let's see here. We're going about an hour now, but if you could do something, I mean, what we're going to do while well, let's talk about Twitter, and then when Rodrigo comes back, because we can do we can do where you can ask some questions and ask about certain stocks, and I'll give you my view on it. But obviously, what's going on with Twitter, I am not a risk arbitrage guy, and that means somebody who invests in a takeover place. What's the takeover? It's like 54, 57, it's a 54, right? 54 and change. Now you can see here's the chart. The chart means nothing. They just, if you haven't heard, Elon Musk has come back in and said, "Hey, I'm going to buy. I am going to go ahead and follow through with the purchase at the initial deal price." Stock's trading at $52. This is, something could change. Why isn't it trading at the deal price? Well, part of it is because people are worried that Musk might try to pull some shenanigans at the last second again. So, but once it settles in, then it's just a matter of waiting for the deal to close. And there's not going to be any more juice left in this stock. So I guess my point is that, at 52, above 52, do you want to make that last, try to make the last $2 on that? That's fine. I'm staying away from it. And if you think the deal is going to fall through, it sounds like it's going to cost too much. Again, I'm not a risk arbitrageur, so I don't know all the details, the exact details of the takeover, but it's just not something that is you're going to bet that it's going to fall apart again. Go ahead. I just don't know unless you have inside information. If you have that. If I had that, I wouldn't be able to tell it to you, and I wouldn't tell it to you. So this is the one is people want to get all excited about this tomorrow. If you had it, you own it down here, take the profits. In my opinion, yeah, you can get a couple more dollars out of it. You might leave a little on the table, but especially if it gets up near the deal price above $54. Why? I mean, nobody's coming in and going to make a higher bid. He's way overpaying for this stock. Take the money and run. It would be what I would do anyway. I just, nobody's going to, some people come in and they go, well, I'm not going to sell it yet because it's still cheap. Maybe, somebody else will come in and Jeff Bezos is going to come in and pay $65 for it. Well, that's not going to happen. So that's just my view on that one there. Rodrigo, you there, bud?
Yeah. So we've been here for about 1 hour. I don't know if you, how you're doing there with time, Matt, if you.
Yeah, we usually do it for about an hour, but we got some more time. And I know that some people would, I'm sure, want to have some tickers that they'd like to ask about, or some stocks, or general questions too. I've been more than happy to answer, but we throw some tickers in there so that we can, again, you can get an idea. I think I've given you a good idea of how I look at things, but you have your own stocks and stuff, and it'll give you a little bit better idea of how we try to combine this fundamental situation with some of my experience, some of the but the tricks of the trade in the marketplace, and then of course some of the technical analysis that goes with it.
Right, and Cobalt had a good question there. So this is how the session on Tuesdays would look, which is like a 1 hour session. Every other hour, Monday to Friday, 9 to 5, Matt's in the live room, posting entries, exits, talking with the members back and forth. It's a community there. It's a great community. There's about 200 or so around there. Members, it's definitely great. And
yes, and we do have a separate little page. You just click on it so that if you're off doing something and you miss a trade, you can go in because you're just scrolling through. You'd never be able to go through all the. Where did Matt say something here? You can just go right to that page. There's just a couple of once it says Matt's important messages. Sometimes if there's a really key message away from a pick. I'll also put that in there, but there's not too many of those. You can say, oh, geez, I've been gone for 2 hours doing whatever. And geez, I see that an hour ago you bought this. Is that still a good trade? Yes, no, whatever. Yes, move too much. No, I wouldn't buy it anymore. Whatever. But so it's, I guess my point is we do have two little pages. One is where kind of the main page, we're scrolling through things, talking back and forth, and a separate page whenever I do something, whether it be a specific buy or specific sale. We put that right in there so you can know exactly what's going on at any time.
Right. So let's go ahead and we have a quick one here from Montes has a quick question here. Your entry points are usually late in trading day. Throughout the whole day. It's
throughout the whole day. I mean, one of the things that's kind of interesting is that I do a decent number of trades at the end of the day one thing that I have found is that the biggest moves tend to happen overnight. But there's obviously a lot more risk. But you do especially when you get a market that gets really oversold or really overbought, or a stock that gets really oversold or really overbought. And for instance, there'll be geez, I have no. People say so and so is about to report earnings. What do you think? And I'll look at the chart and say the stock's really neutral. Nothing about there's nothing really controversial out there. I have no idea, and I'm just going to tell you that I have no idea. But if you get a stock that's just gotten beaten up relentlessly and it's ridiculously oversold and the sentiment's really negative and has looked right for, I said, hey, they're going to report earnings tomorrow. Unless it's a complete disaster, the stock has got to bounce soon. And if they report anything that's even remotely good, the stock's going to take off. And so that's when you do it, because the stocks, they're going to report either after the close or before the opening the next day. So you want to be able to get in there. Again, we call them lottery tickets. We spend less money on those because they're much more risk involved. But because we tend to buy them at very short, with a expiration date, just a short couple days away. But they can be very, very profitable. But again, so I do tend to do more in the beginning of the day, the end of the day. But at the same time, especially when I do them in the beginning of the day, I kind of test the waters, buy a little bit. And when I know it's working, I'll get it more aggressive with the same position later in the day, in the middle of the day, I should say.
Right. Then we have next one here, Laser, Lazr.
Second here. Okay, let me just. Oops. Okay, there it goes. Okay. Now here's the stock. It's funny because they say, well, she's right here. It wasn't looking so good because it looked like it was getting low. It needed to get as oversold as it did down here and down here. But let's just look here. Let's get rid of the 100-day moving average. Just doesn't mean anything. 50, that's okay. And then let's look at here. Sorry. LAZR. Oh, see, look at this. Look at the MACD chart right here. See how that was a head fake there? It didn't really give us much. Let me just get away. I just want to take some of these lines out so you can see better what's going on in this chart. Okay, but look at his positive MACD cross there. Look, it went up for a positive DMAC cross there. Look at how much that rallied. Positive MACD cross there. Look at that rally. Every single time. So it's not there yet, but it's getting close. And the thing is, again, this one was a head fake, so you got to be careful. You got to make sure this is going to be a good one. Once it happens, though, it's going to be happening at a higher level, than the last one. That should be bullish. Now, one thing on the longer term, an intermediate term basis, see how tough that 200-day moving average has been? It popped above it at the opening one day. It couldn't even close above it that day. It closed above it one day in the last year. One day, that's it. Got close to it there, couldn't get above. Close to it there, got right to it, couldn't get above it. Didn't even get that close to it. So my point is that if you get a positive MACD cross, that's going to be bullish for the stock. It's already seen a nice rally. It might take a breather tomorrow, and then it starts to run. If it ever breaks above this in a meaningful way, remember, whenever you break above resistance level or break below support level, it has to be more than just, a couple of pennies. You like to see it. Some people say as much as 3%. I kind of say above 2%. Then you really know, okay, this is confirmed. It's really going to go. And don't be afraid to add to a winning position. Don't say, oh, I wish I had bought more than there. I'm not going to buy anymore. It's like, you don't think Will Danoff, and one of the greatest portfolio managers, he's at Fidelity, runs the Contra Fund. You don't think he adds to his winners, to his best picks every day? So all the time, I should say. So and all the great investors do that. So because they're running so much money, when you're running institutional money, you have no choice because you have new money coming in all the time, et cetera. But my point is, they are not afraid to pay up for a stock that they like, even though it's moved up. And you should do the same. So that's the strategy here. Buy a little bit now. If you get more more MACD cross, then you can add to it. And then if you want to hold, if that's for a trade, and if you really want to hold on it for a longer term, a meaningful and confirmed break above the 200-day moving average is going to tell you this thing is going to go a long way.
Right, that's an interesting take for that one. Let me go ahead and pull up the next one. Marty, yes, since you just signed up, make sure that you check your email. There's going to be a form sent out. Just make sure to put out the address that you want the laptop to be shipped to. And anybody that does join tonight before midnight will get bonus trades and strategies from Matt Maley. So let's go ahead and with the next ticker here, Matt. We have, let me roll down here. Earl RCL, Caribbean.
Okay, so it's going to be interesting because Carnival Cruise, this group's just been hammered now. It was funny. Well, Carnival Cruise had it. I'm just going to go just so people can see. Carnival Cruise had negative. It made a negative announcement about their earnings and stuff, so it got hurt even more. It made a new low for the year. Royal Caribbean, RCL, as you can see. It got hit on that news because they figured, oh, they're in the same business. But you can see it did not make a lower low. Now, what we did see, again, I got so many moving averages there. I'm going to take them all out because it's a big a deal. Now, but I do like the fact, okay, the negative side of things is that it did break below this kind of multi-month trend line. But now it's right back up to it. So this is kind of a key level for the stock. It didn't get incredibly oversold, but it's bouncing back. That's nice. Again, it bounced that along. That old support is now new resistance. So if it can break above that trend line, it's going to be bullish. Now I keep using this MACD chart. It says I just use it every single time. Sometimes it's not compelling, but when the market is really sold off, it starts to bounce back. These charts become very, very interesting. That's why I look at them every time in times like this. The same thing happens when a market's seen a nice run, they're starting to roll over. I look at the MACD charts all the time. My point is that the fact that I'm looking so much at them today has to do with what's going on in the marketplace. There may be a webinar a month from now, and I may not even bring up I'll always bring up MACD because I think it's a good chart, but I won't bring it up anywhere near as much as I did. I'm doing so today. It's just what's going on in the marketplace now. But I'm going to guess that this is probably got a good MACD cross, and no, it's just starting. That's okay, but that's okay. So again, if we break above that trend line that we just talked about, you can nibble and start buying a little bit. Then you get a positive MACD cross, especially if it's at a higher level. You see the last positive MACD cross took place here. And it'll be, if it takes place, it'll be about the same level, but that's okay. That doesn't make it any, it's still a positive development. And then you'll have, again, above, remember that trend line that I was talking about. So but okay, so that's the technical aspect of it. The fundamental aspects of it is you got to really pay attention to what's going on in Florida. There's certain areas, Miami, where a lot of these things go out of, it was not really hurt. But boy, some of those areas were just crushed. And so we want to see on the bookings. Again, I don't know enough about Royal Caribbean, the details yet to know, how we need to be seeing what's going on, and if this hurricane issue becomes a bigger problem, because it's still relatively early, and we're just getting into the meat of the hurricane season. If another one comes through, and people, I guess, are people going to book now? And worry about, well, Miami didn't get hit. What do I have to worry about it? But people are sitting there going, geez, a big. We've been talking about going on this cruise. We bought the insurance. We could cancel it. Something I'm going to cancel. I'm just worried about more hurricanes. Things like that can happen. And of course, the consumer's starting to pull on their horns a little bit. But we've seen all sorts of indications that that's going on. But I guess my point is, I'm a little cautious here on the fundamental side. But if this thing can break through and we get some good news about their bookings in the near future, and we get a positive MACD cross, it's going to be a good one to play. Not one I'm going to jump on in a big way right now, but it's one certainly to look at. And that's another thing we do. We constantly are looking at, hey, look at this stock, look at that stock. If it gets here, if that happens, so it's on people's radar screen. So when it does, I mean, if all of a sudden I come up and say, hey, you got to buy Royal Caribbean here, it's like, where the hell did that come from? I mean, you'd rather know in advance. I mean, you can't always do that because sometimes something just pops out, does kind of pop out of nowhere, or maybe I don't notice it until the last second. But you get those things where it's good to know, okay, I understand his feeling. I'm confident, it makes sense. It's moving in the direction he's been talking about. It is breaking out now. I'm going to go ahead and buy it too. So,
Okay, and we have a big shout out here for Jeb, newest family member. Welcome to the family here, lifetime there. And if anybody does have questions about the lifetime, make sure to email the contact we're putting in the chat on Zoom. That's where we're posting the link to join Matt's live room. And he's probably going to be looking into these tickers tomorrow and as the days go by.
oh, absolutely.
And along with any other tickers that you guys have. Keep in
Right.
mind,
I'll tell you something right here. Here's one that we talked about in a previous webinar. Rather, it was last week, I think, but it was not long ago. AR. Okay. Equity. Okay. This is somebody asked me. Oops, what happened? Oh, okay, hold on a second. I'm sorry. I had the wrong side. AR. So this is a stock that somebody else asked about in the chat. I mean, I've certainly heard of the company. I knew the company, but I had not looked at this chart in forever. I know I was getting more bullish on the energy stocks, Antero. So you looked at it and I said, well, geez, this one, it's way oversold. If it can break above its 200-day moving average, this thing's going to run. Well, stupid me, I got so busy, I'm doing a lot of stuff during the day. I never bought the stock, but there were people in the chat room that did. It came up on a webinar. I talked about it the next day in the chat room, and people took advantage of it and made real nice money in this stock with the breakout. See how every single day it bumped up against this 200-day moving average. I said, it looks to me, since it's very oversold, and I'll bring up the MACD chart too. Study. I said, it looks to me that, when you try that many days in a row, it's going to eventually break it. And when it does, we want to own the stock. So let's own the stock. And now here, we haven't even seen the positive MACD chart yet. It hasn't even made the positive MACD cross. This one, again, it doesn't look like much of a move, but let's just pull it up here. I'm going to get rid of two of these lines so you can, I'm sorry I have so many lines out there, but there's a lot of stuff that I look at that is helpful to me. But when you're not looking at charts as much as I do, it can be a little, but see here, on an intraday basis, the stock's up 14%. Okay, so we've already made some people in chat. I have not. I missed it. What a dope. 14%. Those who bought options obviously made a lot more. 14% in a short period of time means that it's probably due for a breather at some point this week, maybe tomorrow, next day. But again, I'd love to see if it comes back down to its 200-day moving average. Again, that old resistance is now new support. A couple of days of a digestion would be great. Then it breaks back up. We're buying more stock. It gets a positive MACD cross. Look what happened the last time. Big rally in the stock. Look what happened the time before that. Big rally in the stock. This thing could be heading a lot higher. So again, this was something that I didn't. It was one of you people in the webinar who asked me about it, and it turned into a winner. I wish it turned into a winner for me, but again, I was just busy. It's been a busy week, and I never got around to making the trade, but other people did and made some real nice money. So. These are the again, it's just to show you that was one that came out of the blue. I was like, I haven't even looked at the stock, but wow, somebody else pointed out, it looks great. Let's get into it, and it worked out real well.
All right, so we have some of the tickers here. Let's look at a couple of ones here. Barbara with Costco.
Okay, now the thing about Costco, and I like about Costco, now, a lot of people are worried about, and rightfully so, worried about the consumer. There's a couple things here. Well, we're looking at the chart, but before we do that, okay, I'm gonna go back. Okay, let's just look at the fundamentals here. Yes. Okay, Costco. All right, now it's trading 30 times earnings. Okay, that's not cheap. So nope, we gotta admit that. So at the same time, what are people doing? Are we heading into a recession? A lot of people think including myself, think we are. No matter what the Fed, even if the Fed pivots, they're not going to be able to avoid a recession. It's too late. And this is going to be. I mean, where are people going to go? They're going to go to Walmart. They're going to go to Costco. Costco. I mean, I can only talk about the store near me. I actually haven't been to it in a while, but boy, it's just a great store and it's an easy store. And whoops. Okay, great. But look at what's happening here. Okay, I'm going to put this up. Hold on. I want to have the RSI up there at the same time. Relative strength, bang, bang. Ooh, okay, now remember, it's coming off the 200-day moving average. Doesn't matter that much. In fact, I'll just take it off. get those out of the way so we can see it. Okay, you see how it's coming off an oversold, very oversold level. See it last time in a real nice rally. This is trying to make, again, mini lower highs, lower lows. It made a mini higher low. Okay, that's a little bit changed. So if we can make another higher high, that's going to be good. And look at this. Its MACD cross is about to cross the positive side. Look what happened when it got positive D MACD cross there. Look what happened when it got a positive MACD cross there. Look at that rally there. Okay, so this is what we're looking at. And again, it's one of those things where we're not sure what's going on with the market. We're not sure what's going on with the Fed. I am been bearish for all year long, but I do realize with this thing with Credit Suisse going on that the Fed, we might be getting some liquidity inject. Nowhere near, we're not getting major QE like we got in 2020. This market's not going to explode to the upside, but it could be buoyed. And if that is the case, do you want to jump right in and take that? You're not going to know that immediately. You're going to jump right into some technology stock that's trading for 50 cents. Go into a Costco that, if we're wrong and the market does roll back over, Costco is not going to fall out of bed. Okay, not to the degree of the market. You're going to get some protection on that again because it's already down. It is expensive, but there's a reason it's expensive. It's a good company with great long-term potential. So potential. It reaches potential every single time, but its potential keeps growing. So and it's just a good defensive play. But again, that MACD chart really looks interesting. You get much more upside there. This stock is gonna, as I say, I call it for those who are a little bit older, I call it a Beach Boys stock. Is going to run till the daddy takes the T-bird away. But that's a song from the early 1960s, even before my time. But I'm familiar with the song. But anyway, that's so that's a good one. It really looks good. If this market turns up higher, this is going to be one of the stocks that's going to outperform.
Yeah, and if you guys want, more classical music recommendations, Matt Maley is in the chat room there. He's got some classical Christmas songs as well.
Yeah, you want Bing Crosby and White Christmas. We'll go way before my time.
So let's talk about one thing here, Matt. You and I have been talking about, by the way, I don't know if you guys have seen this but Matt, basically, I remember when you were talking about Nadella, or the guy from Microsoft, selling his part of his portfolio. And basically that was kind of like the beginning of the end. And you gave everybody, all your members, a clear kind of, hey, look at this. Like, this is not something you see every day. Things are changing.
And there was a person in the chat room who recently told me, I don't want to get his name, but he recently told me that he sold all of his Microsoft after I told him that, and the stock went down, 30 some odd percent. So it worked out really well. This is the story behind Microsoft. When we came in here, let's go back here. And I'm just going to get rid of some of these things so that too many lines, but here it is. We're at Thanksgiving of last year, right here. And it's announced that Mr. Nadella, had sold half of his personal holdings. And I'm like, what? Wait a minute. It's one thing for a guy to sell, he wants to buy a mansion in Hawaii. He sells $20 million worth of stock or $10 million worth of stock to buy it. That's fine. He's selling half. Okay, and then the stock goes down. Then he sells more. He sold 2/3 of his holdings, $374 million worth of Microsoft stock. He sold right here. And I said to myself, I said, that's a top, guys, and it has nothing to do with Microsoft. First of all, Microsoft is expensive. It's a great company. I absolutely said that. Mr. Nadella is a great CEO, and I said, I'm not saying he's doing something unethical here. He bought the stock over many years. He turned the company around. The company had been the technology company in the world, along with Apple, in the 1990s. Went through a big swoon. He's brought it right back up near where it was. Well, right back up at where it was before. Now there's several other companies that are along with it, but they're right back on top. And he's been the reason. So the fact that he was selling, I wasn't worried about him, selling all the stock right before a big accounting scandal. He just saw what was going on. He saw what the Fed was doing. He saw what there's a reason all the Fed, suddenly, and all these people in Congress, they started selling their stock. I wonder why that happened. They knew what was coming, okay? And he saw it. and he said, my stock is overvalued. It's not his fault the stock got overvalued. He didn't lie about anything. He told everybody the honest truth. The company's still a good company. It's going to be a great buy, and maybe here's the level. But my point is, he sold the stock, and when insiders sell, you get out. Okay, if everybody sells a little bit, that's fine. But when he sells a lot, and I worked at Merrill Lynch when Stan O'Neill ran the company into the ground and basically had to be taken over by Merrill Lynch. By Bank of America. He sold all of his stock right at the top, all of it, because he knew what was coming. He didn't tell anybody, but anyway, I didn't say he didn't tell anybody, but it was just a whole another issue. But anyway, so the point is, I've seen it, but it's not just my personal experience. You look at what happens when smart people sell. You have to pay attention. Goldman Sachs, they've been a private company for 100 years. They went public in 1999. What happened the next year? They saw what was happening. They saw that the market was way ahead of itself and was going to crash. They sold their company to the public, kept some shares, and still, I'm sure they all still do. Same thing happened. Blackstone, the big not BlackRock, Blackstone, the big private equity firm. They've been 25 years. But they went public in 2007, sold their company to the public. What happened 2 months later? The great financial crisis started. They saw it coming. The same thing happened. They go on and on. Sam Zell, it wasn't an IPO. He just sold his company to the public. I'm sorry, he didn't sell his company to the public. He sold his company to another company right at the top of the real estate market, right before the real estate bubble, just before the whole market fell out of bed, just a couple of years before the financial crisis. This is what they do. The smart people sell at tops. And I saw that what was going on with Mr. Nadella and knew that this is why he was doing it. Now, one last thing before we move on from this subject is that just because a company goes public doesn't mean you should sell. Okay, companies go public all the time for good reasons. It's a new company. They've only been around for 3 or 4 years. They need more money to expand, so they go public. Okay, that just because a company goes public doesn't mean, oh my God, I got to get out. But if a company's been private for a long time and they decide to get out, or a CEO decides that the market's been the stock is run too high and he sells a big portion, that is a clear sign. That is a clear sign. Thank you. So that is a clear sign. So you want to be very, very careful when those things happen. But like I said, just because the company goes public, Microsoft went public in the 1980s, right? And they said, well, that wasn't a top. No, but the insiders didn't sell. Bill Gates only sold $1 million worth of stock. He kept most of his stock. It was the venture capital guys that had seeded him, who gave him the seed money. There's the ones who wanted out. No, they were idiots. They should have stayed private, but they didn't. So again, every situation is unique. But when insiders sell in a big way, it's something. Now, and this, again, and I said it at the same time back in December, it's like, what did Jamie Dimon do? Jamie Dimon in 2016, the market was getting hit. Market was down about 15%, and people were worried. Oh my gosh, our banks are in trouble again. It had only been a few years after the great financial crisis. And Jamie Dimon came out and spent $26 million of his own money to buy his stock, JP Morgan, personal money, not company buyback, his personal money. And it's like that told me that he believed in it. He was not, the insider wasn't selling, he was buying. It's funny though, but this year when the market was down 15%, what did he do? Instead of buying stock with his own money, he said, watch out, there's a hurricane coming. He said that here. Well, look how much farther the stock sold off. Yeah. So again, that was another thing. I brought that right up. It's like, hey, the last time the stock was down a lot, he bought. Now he's telling us that the hurricane's coming. Well, guess what? The stock sold off another 25%. Thank you very much. Listen to what the smart people do. Watch what they do. Again, if they do small things, it's not a big deal. The CEOs sell $1 million worth of their stock, especially if they've been there a long time. They've been there for a lot of years. They start selling stock at small. Every year they just roll some off. That's fine. That's what I'm talking about. But when a guy comes out and says, Microsoft, I'm selling 2/3 of what he saved himself $120 million by selling that stock last night. He did nothing illegal, nothing even remotely unethical. It was the marketplace and the Fed liquidity and all that stuff that pushed its stock up to high prices. And he just said, I've owned this stock for so much time, I'm going to sell a big chunk of it. And he still owns stock. He's going to get more. Believe me, at the end of this year, they'll give him more as part of his pay. They do every year. It was just a smart thing on his part. But when smart people do very smart things, which are also very ethical, it doesn't have to be Bernie Madoff stuff. Pay attention to it and profit from it. And the people in the chat room did exactly that, and it worked out real well. Not just on Microsoft, but on the whole market.
Matt, let me ask you something here, man. Since I really love covering different topics with you because you're very knowledgeable. You cover global equities, not just U.S. equities, bonds, everything. So there's been talk about some sort of food shortage. I don't know if that's going to happen here, but like in other places, maybe. What is your insight on that?
Yeah, that's a big concern. I mean, especially, what's going on in Russia is just, Russia and Ukraine is just really scary. We started talking about using nukes and all that. That's a whole nother can of worms. But the problem is that, now you almost, he might freaking lose. It looks like he might lose. And well, that's what scares me, because when you get somebody like that who's backed into a corner, what will he do? Because if he can save face in some way, things will be okay. But the point is that right now, he's still Putin's still going to keep going, and the Ukrainians are going to keep fighting, and that means that the breadbasket of Europe is going to remain shut to a large degree. And that means food prices are not only going to go through the roof, or stay high, I should say. They've already gone through the roof, stay high, but they're also going to be shortages. And then then you talk about social unrest, and people forget. Now, the last time in the early, about 2012, when the last time food prices went through the roof, there was a social unrest in the Middle East, and that was really, well, yeah, it was there, but there were riots, big riots in Paris, London. It's because there were food shortages, and in Paris and London, they could get the food, but it was so ridiculously expensive, people couldn't afford it. So this is a big issue. There's so much still going on out there that is going to keep these markets volatile. We got Taiwan. What's going to happen when President Xi gets elected? Was it 2 weeks from now in China? Maybe it's just 1 week from now. And then he can just do whatever the hell he wants. Okay, what's going to happen there? Is he going to go to Taiwan? I don't know. What's going to happen with Putin and nuclear weapons? What's going to happen with OPEC? And on and on. It's just so many. And what's going to happen when? I hate to say it. I'm not trying to do any. When I talk politics, I talk about what it means for the markets. I don't care about what should happen. I care about what is happening, what's going to happen. But what's going to happen when the election's over and suddenly Biden doesn't care about keeping gasoline prices down quite as much as he used to? I'm not saying that he doesn't care. He certainly will care, but he won't care as much, at least over a near term. Oil prices go back up. What happens with that? So there's just so much thing going on, volatility in the marketplace. What we've seen so far is going to stay with us, I think, for a long time. And that's why I think this, what we're doing here, what I'm trying to do anyway, is help people because we have the tools that we never had in the past, individual traders, and that's how it's really working well for us.
Well, and if you're a new trader, you've been maybe just, looking at the Fed. The Fed has either been purposely doing this, I guess, misleading, or I don't know if you want to call it lying or whatnot, but it's really hard for new traders to kind of get a grip on things, right? Because, you turn on the mainstream news, who the hell knows what they're talking about? And then, you're trying to listen to the Fed thinking, oh, well, this guy looks legit. He's got a suit on, right? But then at the same time, you were mentioning the other day that they're not even part of the government or anything like that. So traders ultimately find themselves confused in these markets, especially in the middle of a recession, market crash. So this is really when your 40 years of experience comes through, where you can trade around it and just tell them things as they are.
Right. That's the whole idea. It's just the Federal Reserve is not, it has the word federal in it, but it's not, it is privately owned by the member banks. And if my family say, if you don't believe me, call them and say, you want information under the Freedom of Information Act. They'll be happy to tell you that, sorry, the Freedom of Information Act does not pertain to us because we are not a federal agency. They're not. They have guidance. There's no question, but they are not a federal agency. And so it's just, again, the things that they lie, they kind of just, they don't want to panic. They say, hey, listen, things are really bad, because they don't want to cause panic. But they knew damn well that this tightening policy would cause the market to go down and cause the economy to slow. Why? Because it's happened every time they've tightened. Every time. Okay, so at least every time since World War II. And so for them, they say, "Oh, we can have a soft landing." Come on, it's just you need so many people. The people on CNBC, Bloomberg, Yahoo Finance, whatever it happens to be, they're good people who are working hard to get the stories. But a lot of the people that they have come on, those people they work for money managers or for brokerage firms. They're paid to be bullish. They're always paid. Oh yeah, well we might have a problem here in the short term, but I give it to you straight, and that's worked really well this year. And we've made, even though the market's gone down, we've made done very, very, very well. So that's really it. But anyway, that's it. Maybe we'll wrap it up here, Rodrigo. But again, I wish everybody the best of luck. What's going on right now is even more intriguing after what's happened this week. We'll see if we get some more upside follow through, because you got to change when the situation changes. And if it looks like that the Fed has got to do some things behind the scenes to keep things together for Credit Suisse, the market could see a nice rally. If not, or if things get out of control, because hey, if Credit Suisse is having problems, somebody else is having problems too. This thing could be another big move, another leg lower. I think we're going to see a big move in the next month or so, and we want to capture it. And I'm not exactly sure which way it's going to go, but I have I have what I'm looking at will help me and help you make that decision and go along for the ride.
Right, and I'm going to show you guys the live room here with some of the trades from Matt and the community there. So big shout out there. Matt Maley, thanks a lot for being here. You do a lot for the retail trading community in the chat room and everyone else out there. So let's give Matt a big shout out there. Let's go.
Thanks a lot, Rodrigo. See you all in the chat room, and good luck the rest of this year. We got a lot more opportunities, and we move into next year as well. It's a time where a lot of people are frozen. This is a time to be acting because bear markets present great opportunities, and we now have the tools to use them. So it's working really well. Thanks a lot, Rodrigo. We'll see you in the chat room.
All right, man. I'll see you there tomorrow. Very big volatility week. Definitely want to be there with Matt. You want to trust me on this. You want to be there with Matt in the chat room. All right. So, folks, I'm going to answer a couple of questions here that you guys have been posting here. James, the chat room has been in existence for about a year and maybe a month, around there. I launched all these chat rooms and schools, all these things you see here. And I remember when it was just me and Matt. Right now, there's about like 200 members, and it's an international group. So there's people from all over the world. It's not just people in the US. There's people in Europe, Africa, Australia, all over the world. And you will have trades there from Matt directly. So in these two channels, Inner Circle Chat, everybody there is posting, including Matt, right? It's a conversation. And then in Matt's important messages, which is the other chat, you can see that he's posting clear entries. Remember we were talking about the UUP? I don't know if anybody remembers, but we were talking about selling the UUP, October 7th, $30 puts. He literally showed you guys this trade live when we started. This is the exact alert that you get to sell that, okay? And it's so simple, straightforward to follow it. All you have to do is mirror the trades. He's telling you he's selling the UUP October 7th, $30 puts right there, which he gave you the alert to buy there as well. So you can see that all of the trades, TLT, does anybody remember we were talking about TLT? Right there, okay? So all of these trades are posted here throughout the day with clear entries and exits, okay? Let me go to the next questions here. Paige, all the trades are logged in, correct, as you can see. You can see right here, Matt Maley, we were talking about TLT. Look at what he posted, exact time stamp. None of this stuff can be changed. It's all here, right? The winners and the losers, everything is here. I'm going to sell my TLT September $30, $103 calls that I bought yesterday. They're up more than 150%. It's time to take a profit. However, I'm still holding my TLT $105 and $106 call. He's putting some more commentary there. So again, you can see it's very precise. Matt Maley is very precise with all his trades, giving you even market commentary as well, which is also great to have. Remember, the session is on Tuesdays 11:30 till 12:30. It's a live Zoom, just like we were here today. It's just Matt. He runs it with you guys. W Adams, you can see, look, there's several recommendations per day. He's always adding, trimming, taking profits from here, going on the other side of the trade. Like this is Matt Maley basically, if you can see here, he's like he many times, like for example, he'll make money on calls and then sell that, and then buy some puts and then make money on that. So it's basically like continuous, like there's always trimming, selling a little bit, adding here. So there's always basically trades in there that you can see, right? Yeah, James, you can share trades there in the chat. So like, let's say here in the inner circle chat, everybody can post, right? All the members can post. It's only in Matt's important messages that only he can post, so that everybody has a clear following on his trades. And that's why we made it this way, right? That was the whole concept of having it that way. All right, page is the trade room open chat. This is open. This is how it would look on your end. Like this is how it would look, where you would have access to that, to the live room. And also you'll be getting 2 bonus items. Anybody that joins live or before midnight, they're gonna get like bonus trades and strategies from Matt Maley. Yes, James, he's consistently taking profits. He's very good at that. Some people, yeah, that's really the good thing. You really just have to follow, follow his trades. So everybody that signed up here, remember to fill out the form. So once you sign up, there's a form that's emailed to you. In that form, you put the address that you want the laptop to be shipped to, and that's going to be sent to you after the 30-day money back guarantee that everybody gets. Again, this whole deal, everything I'm talking about expires at midnight, right? But if you have any pressing issues or things like that with the schedule, send an email. I'm going to put my contact there. So yeah, Paige, it's 30 days. It's 30 days. And you will get the bonus trades from Matt. You will see those. Those are going to be good as well, right? And strategies. So when it comes to the session on Tuesdays, you will get an email with the invitation. But this is really where you want to spend. Depending if you're busy and you just want this for the trades, you can just get into Matt's important messages and get the clear entries. Paige, I don't know if you can read this. I'm trying to zoom in here, but basically this is the TLT trade he was talking about for 150% that he sold. So taking profits, right? Yeah. All right, let me zoom in there. So yeah, that is the TLT trade. Remember, he showed TLT at the beginning of the session. So that was it. Like he's basically showing you how he's able to profit through the volatility, through what's happening. And he's very familiar with all these things like bonds, yields, stocks. He's a global equity strategist. Like this is, most people that you see on CNBC or these places are just US equity guys. Matt, what he does at Miller Tabak as a chief market strategist pretty much provides research and analysis to institutions, right? Institutions that manage a lot of money, and they pay Miller Tabak a lot of money as well for these reports and analysis. So you guys as retail traders, okay, you get the benefit of that. Plus you get the trades and all that as well included. So I really think if there's a ton of value here just by the education, but trades are like, they're there, right? Everybody can see them. Everything is there. James, all right, seems like a good baseball hitter. Right. And look, those trades like where we showed that he was like up like 7,000, 8,000, and then 4,000. Those are like probably once a year, like he's gotten them once a year since or twice a year. It's not every day. But here's the thing, right? The volatility is what makes those opportunities happen. It's not like you could just go out there every day and do it if you want to. The opportunities need to be there, right? Reasonably, according to Matt's personal filter, right? His 40 years of experience. Yeah. So Patel, the chat room is up over 300% for Matt, and he's not going all in on any of these trades. And we don't want you to go all in or even half in on any of these trades. Matt is using 5% single digits on these trades, right? On these options. He's not going all in, right? So we're talking about a year. Are there people that have a heavy hand and, might go a little bit heavier on certain trades and have higher wins? Yes. I know people in this chat room that have 7x, 10x their money or doubled it in a couple days with a few trades. It happens, but the opportunities need to be there. I'll tell you, March was March was a really good year for a lot of people in the chat room because we've been shorting the market for a while with Matt, and it's been consistent. He's been consistent with his approach on the trade side of stuff. So, but yeah, that's why you also get the 30 days. So even if you just join for the community, you can use that chat room there, the inner circle one, or if you're busy and you just want to get the trades, you only have Matt's important messages, and you have this open just like you have your other Google browser, your Gmail, YouTube, your calendar, a Word document, just like anything else that you would have open. You have this window tab open because you have the opportunity there to trade with Matt there, right? So, so yes, Patel, and the other trades that you guys will get, make sure to check your email for that. Let me drop the link there before we do finish this off. And we're going to let the stream here run for a bit so that you guys can sign up at least while it's live and get the bonus stuff there for Matt. All right, folks. So I put the contact there in the chat. If anybody does have questions, reach out. Thanks a lot for being here. Hope you guys have a good day. Happy trading, and we'll see you guys in the chat room tomorrow.